China stocks are jumping today as Chinese top finance regulators point to more economic openings to foreign institutions. Yahoo Finance's Jared Blikre is here to break it down for us. So, Jared, what are the standouts here?
Well, in China, this has been a tricky situation. We know their reopening has not been living up to expectations, so they've been trying to juice various sectors of the economy that are flagging in order to bring them back without overheating the overall economy. And that's very important to distinguish. So they've been sending targeted stimulus, for instance, to the property sector, to certain manufacturers. And this has helped certain companies, but system-wide, the Chinese people are still in savings mode. And we just got the latest import-export figures overnight, and they were not good. Year over year, we're still seeing contraction, and this is an economy that was just coming out of a total lockdown in certain areas. So here I have the NASDAQ Golden Dragon Index components, at least most of them, over the last 5 days. What's interesting to me here is, even though we've had this great growth story in terms of mega caps and growth this year, well, maybe not growth, but at least in terms of stock market returns, China has not necessarily participated. They are their own animals, so to speak, but they really come back over the last few days as a lot of the domestic sectors in the economy in the U.S., a lot of the cyclical sectors like industrials have picked up. So I see this as more kind of good news surrounding the potential for the economies around the world to reopen. But China still is facing some headwinds here. I'm going to show you what's been happening with the Chinese yuan. Now, this is the U.S. dollar versus the yuan, or also called the renminbi. And we can see overnight we did see a strengthening of the U.S. dollar. This is when this is going up, this is the U.S. dollar is getting stronger, yuan is weakening. And then in the opposite direction here, this is the U.S. dollar weakening with the yuan strengthening. And here's a one-year chart, and you can see pretty volatile action. We actually don't see a lot of currencies exhibit this volatility, but this peak here at about 7.3, that is a very significant peak because we go back, this max chart goes back about 20 years. This was the highest since we got to this regime that existed just before the global financial crisis, when China was building its own bubble back in 2007, 2008. So here we have a volatile currency. The last resort for the Chinese government, I told you they're doing targeted stimulus, is going to be overall stimulus. And there's expectations that they are going to cut their main deposit rate next week from 2.75 maybe down to 2.65. Doesn't seem like a lot, but that's kind of a big step for the Chinese government because they would prefer to just deliver that targeted stimulus. But if they have to, they will turn on the fire hose. If they do that, we're going to see this chart right here go up pretty much straight. There's not a lot of resistance above these levels that existed last year. And if the Chinese want to devalue their currency, well, that turns into an international issue as well. I would expect to hear from the administration, guys.